Egypt's stock market may still be shut, but the banks are open again, and we can see now them starting to see how the unrest has affected the rest of the economy. Egypt is planning to auction $2.5 billion worth of treasury bills this Monday. Well, BNP Paribas says the cost of borrowing could surge by almost a third as foreign investors stay away. Well, the local currency, the pound, dropped more than 1% on Sunday. Crédit Agricole predicts its decline will be 20% short-term. Well, interest rates on 10-year debt peaked above 7% at the end of January before dropping back last week. Well, Barclays Capital says it does not see the political risk abating anytime soon and expects market volatility to remain high. Alia Moubayed is Senior Middle East Economist at Barcap, and she joins me now on the phone from Beirut. Thank you very much for joining us today. Now, you do say that overall, particularly before this unrest, the economic picture in Egypt was pretty stable. But how long does this have to go on before the very fundamentals are damaged?
I mean, obviously, the sooner we get some further clarity on the medium-term political outlook and the roadmap for the constitutional amendment, the formation of the new government, or whatever, or before that even the roadmap towards election, the better it is for the economy. The single most important risk today in Egypt is obviously political risk. But the more this political risk is prolonged, we are starting to see obviously emerging important fiscal risks and financial risks for the banking sector too.
Now, what about foreign direct investment? Presumably it's halted at the moment, but do you think that it will be damaged severely in the long term, and what does this do for Egypt?
Sure. Egypt is the country that attracts most FDI towards the region, both greenfields and for some time privatization. FDI, I think, and we say it clearly in our note, is on hold. I've talked to a lot of investors, particularly investors in the Gulf, who were looking for opportunities in Egypt, in retail, in real estate, in housing. Obviously all of these projects are now on hold. FDI is important to finance Egypt's large current account deficit. We are talking about a current account deficit that is about $3 to $4 billion. It possibly could widen now. So if we're thinking that one of the main financing sources of this current account deficit will be severely damaged, like FDI, but possibly also portfolio flows, and this week we will test that, then the EGP or the currency will be significantly under pressure in the short to medium term.
And in the short term, what about the outflow of money from banks? We've seen banks opening over the weekend, and many people may just feel that they would feel much safer if their deposit was in cash under their bed at this time. Is that likely to be a real problem throughout Egypt?
I mean, yesterday, what it seems from what we saw in the banks, we talked also to our own Barclays corporate bank, who has a big presence in Egypt. I think people were expecting much worse in terms of behavior of people coming to withdraw. The restrictions and the limits that the central bank has put has significantly reduced the risk. And obviously, in a security situation that is still unclear, probably consumers would probably prefer to have their cash in banks rather than hold them at home. I guess that's also playing well. I think the test now is really what happens in the local bond and bills market. Foreign positioning in the local bonds and bills market is at a historical high of about $10 to $12 billion. We've seen yesterday at least $1 to $1.5 billion of outflow from the local bond market, and potentially we could see more now as trading starts through the day. And also the auction that will happen today will be an indication of the appetite of foreign investors. We're not expecting foreign investors to come in significantly on this large EGP 15 billion auction today. We're rather expecting the local banks to foot the bill, but at a significantly bidding higher for yields, obviously.
Oh, okay. Thank you very much indeed for that.